um, which is very interesting. Nothing, well, I shouldn't say nothing lasts forever, but there are some businesses out there that are very enduring. Thankful for you. Thank you for helping people. Oh, thank you, Bernard. When I think back on the journey too, like, you know,
Wait.
well, I
Oh,
shouldn't say nothing
oh,
lasts
wrong
forever.
button.
Hold on. Sorry. It was a little bit of like a feedback loop because I'm just clicking on some buttons over here. Yeah, I'm super thankful for just the journey. Even like I don't know, like every inch of success or whichever, like you still come back to it. Sorry, I don't know if like what I'm saying makes sense, but maybe well, I'll start sharing the second half. But yeah, it's been a pretty good week. Let's dive into it, huh? Markets have been we got that bounce in the broader indices, which is what I wanted to see. I think markets still look pretty healthy. There is one corner in the markets that I don't like, which is I do see the dollar spiking. So that does, make it a little bit concerning. But if we look around, there's a lot of, I would say there are quite a bit of plays that look pretty interesting, right? So, one of my big positions right now, I would say, is probably Tesla. I think that one's going to be running maybe until year end. But let's see. Let's analyze all the stocks that we can. And towards the second half, we'll be going through some of these reports that I have on the screen here as well. And that will be the session today. And then I'll give you guys some updates on the second half as well. So let's get into that. Bernard says, I bought Google and am down about 2%, thinking about buying more. Well, let's take a look at it. Let's examine your purchase. Now, before we dive into Google, right, I do want to pull up some of the indicators I have right here and just want to make sure my systems are good to go. Just one second, closing some stuff out. There we go. So looking at Google right here, or I'm sorry, FNGU, right? We got this nice bounce right here in the last 5 days. So one, two, three, four, five, right? So excuse me, last week we sold down to that 20-day moving average, and now we came back up. Again, FNGU is sort of the proxy that I use to feel out what's going on with the FANGs, right? The FANGs or the Magnificent Sevens. Basically, the stocks that I suspect have the highest consensus in the marketplace overall. So the more consensus, the more people know about it. The more people know about it, then the more likely they're going to transact on it. So let's go into now. Now that we have the bigger picture perspective here on FNGU, things still look pretty good in my opinion. Let's go into Google and let's see what we're looking at. And let's assess like why did you buy here, right? Um, like what did you see? I mean, if you want to share. Oh, so you bought okay, so the question is, when did you buy Google, right? Did you buy on this big drop day, or did you buy on Friday? Which day was it, Bernard? I'd be curious to know. And I could give you my perspective on things that, should and shouldn't do, at least from my experience. Um, but there was some resistance right here. This is the resistance. I tried to buy this one too, because I was expecting it to go over this right here, but that wasn't the case. And I'm guessing if you bought it, I'm thinking maybe you bought it on this big red day, this big down day, which I understand the logic behind it, or at least I suspect I understand the logic. But for me, it's not the practice that I like to go for. So there are some key things to look at right here, right? So Google did fail the 20-day moving average, which is like a signal to essentially, I mean, you could say sell, but get defensive. And then now we're back at the 200-day moving average, right? Again, I know I'm pretty like strict on these like moving averages, but I think in the long run, mathematically, like you'll if you look at the big picture in the long run, you'll thank me later. It's just this is what the pros are using, and so I want to line up to what the pros are using. So he said he bought it at 179. So 179, I'm guessing he bought it on this day right here. Well, 179. If wait, hold on, last week, if you bought it at 179, you bought it way up here then, right? No, no, you didn't. You didn't buy it last week. Actually, you bought it probably like over here. I'm actually down about 8%. So you probably bought it like more than a week ago. It wasn't actually last week. Yeah, no, I would have agreed with you on that as well. I probably would have, I did buy it there, and I stopped out. You gotta have a stop, right? So like, that was like my risk management right there. So if I draw this line right here, maybe put in red. I mean, that red's not a good color. Let's do like bluish purple, or there we go, that color. that would have been the stop right there, right? The attempt was like, hey, I think this thing could break out, and it was a fair trade. It was a fair trade in my opinion because you had earnings right here, you gapped up, right? And then it came down and then it came back up. So big player came in on earnings most likely, sold off, but it came back up, but then it fell and it got weak. And then where that arrow right there is pointing, let me delete this arrow. Where that arrow is pointing should have been the risk management, right? So when you don't manage risk, you let it go. So now it's against you, which is in some ways okay if you're playing the fangs. It's not okay if you're playing options. If you're playing options, you want to consider something, consider some sort of risk or hedge. Now, what do we have then? So we got broken at the 20-day moving average right here, and then it's trading down to the 200-day moving average. So that's currently where we're at. Not a huge purchase. Okay, so not too bad. There is, quite a bit of sizable volume, something to take note as well, right? So the action on this one is just like, hey, I'm not liking it too much. I personally, for me, I would back off and I would go for something a little bit better. Moore says probably because of news of Chrome split off. Yeah. Um, yeah, the other thing with news too is like you want to, it's very hard for like most folks to measure the value of like the news, right? I think it's better just to measure the reaction of the markets, but that could be the case as well, right? That could be the news. So that let's say November 21 practice is to go down here and look at November 21 and see like what's the big news right here. So yeah, Google should be forced to sell Chrome browser, Justice Department says. So yeah, there's like this, that's a big move down right there. I would avoid it for now. I'd step back. In terms of like the volume activity, right? We could see that, quite a bit of volume action around here. So it's just sitting in that liquidity pool where the current prices are currently at. So nothing too actionable, I would say. I think the only thing to watch right now is just the support at the 200-day moving average, but that's pretty much it. There's a great report in Barron's, very favorable, Bernard says. Long run, yeah, I think long run this thing looks fantastic. More so from, it's got a lot of cash. Relatively, Google has more cash than I would say like almost like yeah, like almost every other entity out there, right? So they got a lot of cash. So from a monthly chart perspective, if we zoom out to get a bigger picture perspective, I do like the sitting on this 10-day moving average right here. So that actually looks good to me. So not too bad, I would say. Not too bad at all. Um, so let's continue. What else? What else? Ask Google. Let's see. John says OpenAI is thinking of creating its own browser, which could be a big hit at Google. I myself use ChatGPT to pretty much all of my searching nowadays, anyways. There's also Perplexity, right? Perplexity is also going after it. This is a big market, and Google had sort of like a monopoly on the search engines for quite a while. So now things are kind of changing. So let's see. It's not, I wouldn't say it's the end, because like what we're looking at is the stock market, right? And the stock market is where the investor persona comes to deploy capital, or institutional investors come to deploy capital. So what we just need to watch is if the capital is being deployed consistently on a week-to-week basis, or if it's exiting. Right now it's just like maybe that Chrome news is like the initial scare and you see some volume sell off, but it's still holding the 200-day moving average, right? So the larger players are still holding Google. It's still fine. I wouldn't worry too much about that one, but if you're talking about like, hey, why isn't it going up right now? Well, you just bought in or you're holding through a period where negative news just came out. So you can't expect a stock to continue its rally higher when negative news just hit it. So that if that's the case, it's like a broken leg, as we talked about in the past, right? So that means the stock is gonna just like, just sit around for a little bit before it really makes a move. So I wouldn't be focusing on this one. I'd rather be focusing on the stronger fangs, right? We pull up Tesla over here. I do want to look at Tesla again, because this is one of the big positions for swing options trade. Yeah, this I need now. This one right here, this one, nice move above, as you see right here, the big thick red line right there, right? That's the longer term move, and then now we finally have some move post election, et cetera, et cetera. This one's looking very good, and I anticipate this one to run up, continue to run up. If it fails, that's fine. Just know where your risk management points are. Bernard says, I'm not worried. I'm holding for 6 months. Yeah, I wouldn't be worried on that one. Just know that the way you prep your mind is that because of like the recently negative sell off situation or negative news, it's not going to be performing for some time, right? We want to focus on stocks that are performing right now, and so this one would be one of them that's performing. Moore says, why Tesla only till year end? I didn't say only till year end. I just think that I think it's going to continue to rally until year end. Doesn't mean it's only year end. It could continue to rally even higher. So yeah, that's the other part too, like the semantics of language and assumptions that we make. Um, I mean, it just looks good to continue its rally, right? Morris says, my bad. Hey, no worries, no worries. Yeah, so if you know how to play one of these, like especially with options, yeah, as you guys saw in the Telegram chat, right? You could easily turn like like that small account. I reset it down, and it just had like 3,500 bucks in it, or even like 1,000. It went to 3,500, whatever. But 3,500 in a good market, 3,500 bucks went to 23,000, as you guys saw. So it's because of plays like these right here, right? When the plays really take off. And speaking of plays that really took off, right? I mean, this one continued to go higher. Yeah, this one we were talking about last week. Like, hey, you guys are asking me, hey, Kay, where do you? Oh, am I? It's a I put I was like, wait, why is it that? Wrong one. Sorry about that. Yeah, we were talking about this one, and you guys were like, hey, Kay, what do you think about this one? Yeah, I said, it's not a short, and man, look at this, 5 days ago, one, two, three, four, five. Yeah, last week, yeah, I mean, this one was definitely hard, right? And now it's even harder. Now it's even higher. And to me, it's like I wouldn't, this is a parabolic, right? It's a like if you look up parabolic and when a parabolic ends, you can actually Google search an image right here. So parabolic setup stocks, right? Just Google that, and you'll be able to see what a parabolic looks like, right? So this is a parabolic right here. Wow, I'm surprised. So this would be the rules of a parabolic right here, right? And then the sell point would be once it shows weakness. So this one hasn't shown weakness yet. An example of a parabolic would be MicroStrategy, which we could take a look at. But essentially, a parabolic is just something that just goes like really like, just, well, I guess the word parabolic. So we zoom out, this is definitely parabolic right here, right? You can see like it's just like zoop, it just goes up, right? So that's parabolic right there. And I could even move this backwards right here, right? But you don't want to short this just yet until there's clear weakness. Remember, monkey see, monkey do. It's very critical. Early shorts tend to always get squeezed out. Exactly, right? Like for folks who are like, oh yeah, it's going to go down. Like don't be that person. That's again, like just take a moment. Like this is like super valuable wisdom right here. Take a moment and look at those folks who are like, oh yeah, it's got to go down. Like that they're obviously playing in their minds a scenario that's like very like sexy, but like you can't do that. Like that's not objective reality. Objective reality is like what's happening on the charts right now. So if I ask you under the principles of monkey see, monkey do, what do we see, guys? We see that it's still strong, right? So we like the strict rule is we cannot respond until we see there is weakness. We have to see it. There needs confirmation because it's just I don't know like over the years I just realized like it's not going to go unless someone like the market has to see it for your thesis to play out. So you might have like the most like insightful information on AI. Speaking of AI, we should look at that one too. C3 AI. You could have the most insightful information, right? That is just so good, but it doesn't matter until the markets wake up to it. So that's something that I noticed for like a very long time, especially like when I started my journey. And I caught the gold bug, and then I mean the gold trade did play out, but then, like look at gold today, like it's just like, geez, this is a horrible vehicle in my opinion at this point. But you can still play it. It's just like a very boring asset class. But anyways, in the early journey, right? It's just like, yeah, like the thesis is good, like yeah, it's gonna pop, but then like I don't know, like there's a more efficient way to play it, right? You guys ever heard like the Gen Zers or I guess the younger millennials say, what's the meta play right now? Have you guys heard of that phrase? Like you want to play the meta. Has anyone said that to any of you folks? Again, it's like at this point I'm feeling old, right? Because they're using like new jargon, nomenclature and stuff like that. But they'd be like, yeah, what's the meta? What's the meta right now? What's the meta of this cycle? They say that in crypto a lot. Meta is, was it most effective tactic available right now? That's what it stands for. There's an acronym. Meta or meta, whatever. Meta. Most effective tactic available right now. So That's why some of them, I mean, some of the really pro crypto traders, they're talking about like, okay, what's the meta of this cycle, right? Because like every cycle, there's always like a theme if you notice. And I could go back like I don't know, like more than 10 years and talk about the different themes, right? Like in terms of crypto, it was like Bitcoin, then Ethereum, and then decentralized finance because Ethereum supplied the app store. So DeFi, from DeFi, then we had like altcoins, which is like other layer ones and like NFTs eventually, decentralized games, et cetera, et cetera. And then now the meta of this cycle seems to be meme coins. I know it sounds stupid, but I thought about, I mean, I actually applied some intelligence, to like, okay, what's the current demographic curve? What does Gen Z know? What does millennials and Gen X and baby boomers know? What do they know? What are they likely to buy in this cycle? I thought about it. So yeah, it might sound stupid, but in some ways, like it has to be stupid, because it's like again, all I'm looking at is if money is being deployed in a certain market, then I need to pay attention to it. So going back to this one right here, again, we talked about this one last week. Said it was still strong, and look, it's technically it's higher from last week. Last week it was at this price right here, 300, so it climbed another $30. Is it getting unsustainable? I definitely think so. I mean, from a monthly perspective, I already know this thing's gonna have it has to correct maybe like half of this candle right here. So in terms of a correction, it's like $100 correction, but it's gutsy, it's gutsy to try to play something like this. But um, yeah, like again, depend. You can play both sides, right? If you play long, have a very tight stop. If you play short, wait for weakness. Don't try to be a hero. That should be another mantra right there, which is don't be a hero. Every time you try to be a hero, it doesn't work out. What you should do is just wait for pure confirmation from the markets that money is being deployed or certain levels are violated. Then yeah, go for the kill. But other else than that, do not try to be a hero. Right? Do not try to anticipate unless you're a larger institution trying to build like a 10% position. Then yes, that makes sense. But that also takes time, right? Something like an Okta right here, right? Unless you're like a gigantic, mighty, large institution, yeah, like you would be playing something like this, right? If you're managing, let's say right now Okta's at a valuation of 13 billion right here, and you're managing like $100 billion, and you want to acquire 10% of this company, or 10 or even 20% of this company. That means you need to buy like 1.3 billion worth of value here. So yeah, you're going to be the player right here that's painting this large amount of volume that you see right there. So there is a player accumulating, but you need to be mindful that the whale takes time to accumulate a position. So what I'm trying to communicate is like, yeah, there's obvious volume right here, and price is holding, so it's suggestive that someone is accumulating, but it looks something like this, right? You guys see that? See that? That's a whale right there, right? The whale is just hanging out right there. But we're not the whale, right? So that's something to be mindful of. We're not the whale here. The whale is accumulating a position. At least someone is. A group of players, I believe, is accumulating a position here. But the stock won't move until certain criterias, until it meets certain criteria. Um, Bernard says, I bought McDonald's 2 days after the Onion incident, down about 3% since. Do you think it'll have a 10 to 20%, 10 to 15% rebound by year end? We could take a look at it. People have seem to have short memories about incidents. 100%. I mean, like, it's been 4 years since the largest, one of the largest crypto cycles that we saw. So I am anticipating that we are potentially, at the pivot point of like a new cycle, which is like there's a lot of money to be made if you pay attention. Uh, Ed says, look at the last week though. Actually, gold trade would have been fantastic. Yeah, I was talking about just like gold overall, but yeah, I mean not recently on gold. But let's take a look at both of these. So real quick, um, right? So let me go to these. These are great lessons that I think we just need to like walk through it because to me it's like there's a lot of data points here that I think just gets lost like in history, right? Like I mean, if you treat it as like every data point is valuable, there's a lot that's just like we just forget about. It's history. So let's look at the gold trade real quick. Look at the ETF right here. I mean, I was just talking about like the vehicle overall, right? I think Bitcoin, yeah, gold last week without a doubt, but like Bitcoin, it's like a faster vehicle. So that's why I like to like play these like 2x vehicles these days. like Tesla 2x, Coinbase 2x. It's just because like, man, it's awesome. Okay, so let's look at MCD real quick. So let's take a look and evaluate. You know, I don't mind looking into like trades that we regret, right? So Bernard says he bought McDonald's 2 days after the Onion incident, which I'm guessing is that gap down right here, the Onion incident right there, if I recall. Down about 3% since, he says. Do you think this have a 10 to 15% rebound year end? So he's asking me from here a 10 to 15% rebound. That'd be 10% right there. 15%, dang, he's asking for a lot. 10 to 15% rebound. Um, it won't unless it's above 300. That the probability, man, when it comes to options, right, you got to really time it. The probability of that rebound that you want, like a 15% rebound, like this is 14.47% rebound, for this to occur, it needs to be above that 300 price. So as long as it's below that, I think it's gonna be a little slim. Right now, it's sitting on the 100-day moving average. So I think from just the analysis right here, I think we're just gonna struggle until we decide to get above 300. 300 is confirmation for the markets that it wants to move higher. So that's what I think. But from what I see right here, from the gap down right here, you see the gap down on large volume right there. That was the onion incident right there, right? That onion incident was when it first broke its ankle. So now it's just kind of like the stock is kind of limping because you break your ankle, you need a recovery period. So it's currently in a recovery period, and when it recovers above a certain price point is when it the cool part is, I don't know if you guys looked at this side right here. Again, you gotta train your eyes, right? That's what we do. We come in here every Sunday to train our eyes. Because I was actually teaching some engineers I know, and they're just like, wow, okay, like how do you look at things so quickly? And I say it's just hours of practice. So yeah, like we have to practice this because I mean, think about it. Like if you're managing $100 billion, or if you're looking at the portal here where billions and trillions of dollars is being traded in this economy, don't you want to train your eyes to understand analytics? Like that's actually a skill set, and you just got to put the hours into it. So going back to this right here, right? We also see that the price has come back down. You notice how like we had the onion event, right? The onion events right here, and then the price dropped. Look at where it dropped. It dropped to a previous liquidity pool right here. So it found support around 290 right here, which is basically suggestive that there was another player that was trying to accumulate around this price range. And so when the price came back to their price range of accumulation, they started accumulating again. But it started to break down, which is a little bearish. So for me, it's like the criteria that I need to see it correct a rebound 10 to 15%. First criteria, I need to see it above 290. Second criteria, I need to see it above 300. Then I have a little bit more belief that there is a possibility that it can rebound 10 to 15%. But if not, if it doesn't get anywhere near that in the next week or two, it won't happen until year end. So I needed to see it back up there soon, right? I need to see that interested buyer flex their interest, right? Which is they flex their interest via capital deployment. So that's what I want to see. But right now, if you ask me, it's currently in a downtrend, right? So big sell off. This player tried to hold, then this player failed. So this actually kind of looks bearish, but it found some support at the 100 MA. So it could happen either or, right? We could go back up to above 290, or we go above 300 eventually for a recovery. If not, we fail this 100 MA, then we revisit this 280 mark right here, right? And then we could potentially travel to this next liquidity pool down here to the other whale or the other group of whales. So the way I look at it, guys, is like this area right here. There's like one whale right here, right? Yeah, as you guys know, whale one, and it looks like there's another whale area right here, right? So again, these are the players that are way bigger than us, and then there's another player right here as well. So right, okay, yeah, sure. So like there's like three whales that are sitting on different price points, and they're trying to accumulate at least within the range of this right here, which is it goes back to May, the range of the timeline right here. Um, I agree. Great insights on McDonald's. Hey, thank you, thank you, thank you. This is the practice here, right? We look at this to the point where like you just know, like you do this long enough, and you just kind of know like, and you don't even need the indicators anymore. The indicators help without a doubt, but you do it long enough, you really develop intuition with the charts. And I think that's something that can only be acquired via hours of practice, hours of analysis like this. Like, you're building intuition with the charts, you're building intuition with the metrics right here, with the sales performance, and you're building intuition or experiential historical data points, like or like data related to like, okay, I've seen this before. the crowd gets excited, with Doge, blah blah blah. Elon Musk went on stage, then it collapsed, right? You have to build up this database of history in the stock market. The only way is to review it as like case studies, like like college over here. You gotta sort of be like a college professor or a college student. So that's McDonald's right there, guys. But let's talk about opportunities, right? Because I think exciting times moving into year end. Um, as I'm working on the report, the weekly report this week, I see that markets are, continuing to move higher. We definitely got that bounce. It looks fantastic. So one of the key things that I noted in the report last week, I don't know if you guys read my report every week, but I personally put in the hours to make the report every week so that I know that I'm just putting in the hours to discipline myself. And so last week, if you look at the arrow that I'm pointing at right here, last week I did note that we sold off a bit and the fangs look a little bit weak. But what I wanted to see is a potential bounce, and we finally got that, or we definitely got that 20 MA bounce right here, which to me shows a healthy pullback. So if we analyze the narrative of like the S&P 500, right? If you guys recall this portion right here, this portion was when we had the election, right? That's the S&P 500 gapping up. The S&P 500 doesn't normally gap up that huge, so that was like a big move, right? So that's like the impulse move, the intentional move. So markets are intentionally trying to go higher. Then it shot up, right? Continued momentum as it typically would with a large gap up. So gap up on news, positive news, momentum, and then it pulls back. Pulls back because, hey, we were just extended. That's healthy. Pulls back to the 20 MA, found a bounce. Now we have confirmation. Monkey see, monkey do, right? Monkey sees that we got the bounce off the 20 MA. So I think markets are actually looking pretty good. Um, Last week it was like a yellow light, but then now moving into this week, it's sort of like recovering on like a green light. So I kind of like that. Now looking at the Nasdaq right here, right? If I put in my annotations, you see that this top line right here. Again, this arrow where it's pointing, I need it to be above that, right? It's just a criteria that you have on the charts. It's a criteria that I want buyers to have. So if I'm looking at what I'm looking at this chart, the chart, which is a representation of buyers and sellers, I need to see that buyers are very strong and they're trying to push it up. So as long as we're above this prior, remember the principle of prior resistance becomes support, right? So previously this was resistance right here. Let me bust out the drawing tool to make it a little bit more helpful, right? So the markets are meeting my criteria, and if it's meeting my criteria, then I want to get more aggressive. So this was the previous resistance right here, right? So previous resistance, and then we had that breakout point right there, large volume, and then this area right here was like the election stuff, right? And again, this is on the Nasdaq, and we're on the daily right there. So it shot up, nice shot up with a gap, came back, went back below, spines, a little bit of fake out, but you have a test right here on the 20 MA, which happened all last week, which is very healthy, right? So we found support here, and then now we're back above this line right here, which is fantastic because this is support. We know this is support, and we know this is our risk moving into the week. So moving into the week, we know that if this thing fails down here, markets get a little, get a little bumpy, a little choppy. But as long as we're above here, then I feel fantastic, right? I feel fantastic about markets. So this looks good to me from a QQQ perspective. Going over to Dow Jones real quick, right? I'm just giving you guys a quick high-level view before we dive into stocks. It's a helpful practice to calibrate. Look at this. Look, now things are looking even better, right? So again, this was previously the automated trend line that I drew right here, right? So you got 1 point, well, actually you got 1 point right here, 1 point right here, third point right here, and then essentially let's just assume and apply it right through, right? So it broke out, went higher above that line, then went back down, found support. Look at that, beautiful support right there. Dow Jones finding support on the 20-day moving average, right? And then the volume kicks in right here. Oh, wrong line right there. Man, I annotated like a sports event over here, I feel. Like it's like a boxing match, right? So came back down, 20-day moving average, big volume comes in, right? And then shoots back up above this line right here. Fantastic. This is very healthy. This is very healthy market intentions that I want to see. So that tells me like, okay, capital deployment is happening sort of all around on the S&P 500, on the Dow Jones, on the Nasdaq. What about the IWM? Let's look at this over here, right? You don't have to make it super complicated. All we're trying to look for is like, is the capital being deployed? And yes, look at this, beautiful, 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 right there. Bounce right there on the 20-day moving average, right? We basically have confirmation that capital is continuing to be deployed because these moving averages are continuing to be respected. So if that's the case, then okay, I feel good. I feel good about the USA environment, right? Now you go on and screen like the European environment, the Japanese environment, sure, sure, sure. But I mean, we can just look real quick right here. We don't need to. So U.S. markets looks not bad, right? The only thing I don't like right now is from my the years where I practiced macro, And when you look at the mechanics of the system every week, right, you kind of have like here, this is a potential warning signal, right? So I look at the mechanics of the global markets every week because I'm screening through this as you guys see me doing my due diligence in my report, right? So this is a concern right here, right? So the dollar is breaking out right here. So historically, when the dollar breaks out, it's pressure on the rest of the world. So this could pose as pressure on equities, which basically means that like, okay, yes, we're still rallying right now, but this is a caution signal, right? So in the report, I note, if we want to practice reading the report right here. So I'm still writing the report, but this is the weekly report right here. Let me just go back up to it. So in the report, right, every week I talk about right here. So market structure, right? This week right here, I see a bullish catalyst breakout continues, right? The market continuation continues. Weekly structure is bullish. Monthly structure is bullish. Macro caution, right? Bond market selling down still and causing rates to rise, but we're also seeing a dollar spike. So that's the only thing that's a concern for me from a macro perspective, which is okay, right? Because markets could still rally from experience. I've seen that markets continue to still rally even though there are underlying macro cautions. So you don't have to be worried about the macro stuff because they don't kick in till later. But you just got to be aware that like yes, there is a point of like concern unless that dollar could just come back down. Now VIX is at 16 right now. Ideally, I like it 15 and below for swing trading. So that's just something to take note of, right? And then like I'll track like the momentum ETF right here to check momentum. Things are looking pretty good actually. So on top of that, if we go through the report right here, I also include every week I do a snapshot of the $8,000 indicator, right? So this is the S&P 500. Here, let me zoom in for you guys. So like I give you guys a snapshot, like okay, what are the grandmasters saying? Right now they're still long, right? So on the S&P 500, Nasdaq, Dow Jones Industrial Average, and Russell 2000, they're still long. On the Fangs, they're also still long, or Magnificent Sevens, they're still long. So to me, it still looks pretty good. But the only macro concern that we have is just the dollar right here, right? Doesn't mean anything until it means something, right? Monkey see, monkey do. So do not be concerned until the markets react to it. But it's just something that I am seeing the dollar breaking out, which could pose pressure on the markets. So let's look at some stocks now, right? So now that we understand, we calibrate to the environment. Let's look at some of the stocks that I think will perform going into next week. So the narratives that are still hot right now, as crypto, Bitcoin right now, very close to 100K. Um, I know it's like it's red right now, which is healthy, right? Don't look at it like, oh, it's red, it's going to go down. That's not how it works. The way it works is that the posture of Bitcoin is still very strong, and the moving averages are still being respected, right? So if you think the sell-off is bad, it's not bad. It's still good. This is actually healthy right here. So if this thing clears 100K, right? Psychologically, it sends a message to the rest of it's like consensus based, right? Something that that has like how people worship people like Elon Musk, right? Like idols and stuff like that. It's just how it is. Like there's high consensus on Bitcoin. Like everyone in the world knows about Bitcoin. Culturally speaking, like I think at one point on Netflix, I've seen like a Vietnamese movie. I think it was like a Vietnamese movie on Netflix at one point that was talking about like cyber heists or data heists or Bitcoin heists or something like that, right? So the fact that my culture has adopted it in on the other side of the world, it tells me how far the consensus of this vehicle has spread. So it's just that's just really what it is, right? Remember, like valuation is based off of consensus, right? So let me ask, like just do let's do a pet rock, right? I could ask anyone in here, like anyone, the most logical person in here, right? Like, I don't want to pick on anybody, but I'll just pick on Baraf, right? Like, hey, Baraf, like, how much would you pay for this rock? Anyone in here? Let's just review some principles of like market dynamics here. How much would you pay for this rock? Anyone? V, Bernard, Janice, you pay $1. Okay, Baraf would pay $1. I can't believe you would pay $1, but sure. He said he would pay $1. Okay, so that's assuming in a private conversation of like like I don't know, like less than, like let's just say a private conversation of 1 to 1, right? Does it include a banana? The banana, sure. You could take a banana with it too. How much would you pay then? Bernard says $2. Right? You see, we got sort of like a market dynamic here, right? $2, $2, $2, $3, $3, $3, $100, $100. Wait, where did that $100 come from? So we need to understand the modern day and age that we're in right now. If I were to connect this rock to an audience of 1 billion people, how much is that rock now? How much would you pay for that rock? Wait, hold on, hold on. This rock right here, it just suddenly got connected to 1 billion eyes. 1 billion people are paying attention to a rock that Baroff says he would buy for $1. Let me ask you guys one more time. Now, with a billion eyes on this, is it worth $1? Baroff might say yes. Some other crazy guy or girl on the planet of 1 billion people or 1 billion eyes probably says, no, that thing's worth $1 million. That's how prices work. Does that make sense, guys? Only if it is taped to the wall. I know, right? Talk about Sotheby's or whatever, right? But you guys get what I'm saying? Like, the more eyes, the more something has consensus or more eyes on it, the popular, like, I, I'm guarding the rock with my life, Ed says. You guys are funny. That's the principle of valuation, right? So these are things that I want you guys to be aware of, right? Not just like behind the scenes when we look at something like oh okay yeah, like we see a lot of whale volume action on Bitcoin right here, right? I mean there was a lot of whale action right here and it explodes away from that whale, right? So when a whale accumulates, a whale could hold up the price, and we saw that. We saw exactly just that. You see how Bitcoin prices were held up here? Like that's beautiful right there, right? So this entire range right here, like you kind of just knew like there's a whale just going back, buying because they're just too big. So we just need to remember, right? When we look at different stocks out there, we need to understand like, okay, if I look at like I might be technical and I know really good, engineering related stocks, right? Like I don't know, like Elastic or like Confluent or whatever. But the problem with that is that they don't have enough consensus from like the ordinary people. So the ordinary people won't deploy their money into that vehicle. So you have less of like a tailwind versus like a vehicle that everybody knows, like Tesla, is going to have a mega tailwind. So that's why I want to play it because now in my, I guess you say my later years, I'm realizing like, wait, I want to play the vehicles with the highest amount of consensus. So in other words, like, would you want to trade a rock where only 100 people know about a rock? Or would you trade the rock where there's a billion eyes on that rock? A billion eyes basically says there's a billion balance sheets that are looking at that rock. That basically says, holy moly, that means that rock is under attention of like a billion people with a billion balance sheets that could potentially deploy capital with this if they have discretionary income or free cash on their balance sheets. There's a billion balance sheets, right? Every individual has a balance sheet. I mean, accounting principles over here, right? Um, every individual. So if you get more individuals eyes on something, you catch a bid. So that's what I'm saying. It could be as stupid as a rock, as stupid as a meme coin, as stupid as whatever vehicle. But if you get enough eyes on it, you get action, right? So something like, the Jake Paul versus Mike Tyson fight, you get enough eyes on it, it becomes like, one of the most talked about fight of all time, let's say. That's how it is. That's marketing right there. That's sales and marketing 101. But same thing could apply to a vehicle, an asset class, right? So we need to think critically here, right? Because this is like education beyond the charts here. That it takes time to understand, right? Education beyond the charts, because like the charts is like yeah, you're looking at like capital deployment, but like start thinking further and like thinking about like what's happening at a bigger level, right? Not just like who owns it, but like most like just go out there, survey, I don't know, 10 people. Ask them like, hey, what are your favorite stocks? I guarantee you with high probability, or I shouldn't say guarantee, I would bet you with high probability that most of them will just list 5 stocks. And those 5 stocks will be like the Magnificent Sevens, right? So because of that consensus nature, because if you teach finance long enough, you realize like not everybody knows like all this stuff right here, right? Or like yeah, like any sophisticated stock they won't know. And so those stocks, that's their like the stocks that the penny stocks that no one knows about, those are prone to pump and dumps because, well, the people who are trying to orchestrate a pump and dump, they go for people who only know 5 stocks. They only know like Nvidia, Tesla, Google, Apple, whatever, right? They only know those 5, 6, 7 stocks. And so those 5, 6, 7 stocks are always going to pump. So this is one of those moments right here where if you assess the different structures, the different vehicles, the features, the different vehicle features of different securities in the stock market, you're going to understand that some things will trade differently than what you think. And it's like it's because it's more exposed to the different eyes. right? So that's why I'm saying Tesla is sort of like a special vehicle here because I mean it's special enough for it to have a 2x leverage instrument over here, right? So if I put on Tesla over here, TSLL. Wait, why isn't it? Am I my internet slow? What's going on here? You guys still hear me, right? Okay, I see you guys going in. So I'll give you guys an example right here. Oh, yeah, it's just slow. Sorry. On the contrary, I would say big moves are also silently made while no one's paying attention. Dell or app. Yeah, like SAP. Real quick, let's swing over to SAP, right? SAP was like a mega runner, and it was just quiet. It's quiet because like every day it's just slowly going up like half a percent, half a percent. But look at this. We zoom out. No one's talking about this. No one's talking about SAP and how it silently went from $100 until 236 dollars, right? So think about it. So if you travel away from consensus, just know that when you like, look, if consensus is between like seven stocks, right, the Magnificent Seven, and you know that you travel away from consensus, then think about who are the likely players, right? This is how, like SAP, I guarantee you that there's less normal people accumulating this, and that this is under institutional accumulation right here. Look at how orderly this price action is over the last several months. Those bigger players, they know they don't want to do something emotional, right? And sometimes institutions get emotional too, like App Lovin'. They be loving that app. But yeah, look at this. Like this is very orderly price action. And it's just like every time it came back to the 50-day moving average, right? Every time. Why isn't my tools showing up? Every time. Every time. Look, well, 100, 100, but 50 day, 50 day, 50 day, 50 day, 50 day, and it bounced. You can see, right? So just know that when you're looking at a sophisticated ticker symbol, you're traveling away from consensus. So the reason why I'm looking into meme coins is because I'm looking at the crypto cycle this cycle and thinking about, okay, what's the meta of this cycle? What is the most effective tactic available in this cycle? Because every cycle is a little bit different, right? And it kind of it pays to just be there present in history as history occurs, and you learn the lessons by the day. But I also admit I don't capture every single data point because there's so much things going on. But when you look at it from this perspective, like man, like yeah, like you could, yeah,